What's going on? And welcome to another episode of The Morris Code. This episode, we're going to take a look at the numbers for the Toronto real estate market, August 2023. Before I get into anything, I hope you all had a great summer. I know it's pretty short here in Canada, but I hope you're able to make the most out of it. The other day, someone asked me how my summer was, and took a quick pause, and then I just said, it was damn good. I had a pretty good summer, actually. So I hope everyone had a damn good summer, and you were able to get to do everything that you had planned before. Unfortunately, I can't say the same for the Toronto real estate market. Now, it wasn't a bust, but it was noticeably slower than normal for this time of year. Why? One thing: interest rates. Yes, that thing called interest rates. If you take a look at a sales chart, you will definitely see that interest rates has a major impact in the real estate market. Why? As soon as the Bank of Canada started hiking interest rates, we saw a drastic drop in sales numbers. When the Bank of Canada took a pause, we saw an increase in sales numbers, which was very evident in the spring market of 2023 from January to about April of this year. Last week, the Bank of Canada announced that they were taking a pause. So it will be interesting to see if history repeats itself heading into this, hopefully, a busy fall market. But before I get into the numbers, please smash that like button and subscribe or follow. It will really mean a lot to me. Now, let's take a look at the numbers. For the second month in a row, we saw a drop in both prices and sales. This was driven, of course, by a fear of another rate increase when the Bank of Canada announced in September. But of course, it did not happen. So hopefully we see a jump in sales numbers coming pretty soon. Now, the impact was very evident for August. We saw a decrease in sales by 5.2% year over year to only 5,294 transactions. But guess what? This was a drop of over 25% compared to the average August. So it's quite telling what was happening. New listings were up 16.2% year over year, but over 25% of them were relist, meaning properties that were originally put up for sale never sold and have now been put back into the market. Now, even with this jump in terms of relist and listings, prices still increased by 0.3% year over year. So it goes to show you there is still a bit of demand out there. It's just that interest rates have a lot of people nervous and trying to figure out when may be the right time to purchase a property. Interestingly, condos saw the biggest price increase at 7.6% of all the housing classes. And this is due to condos being the most affordable entry point at this point in time. When you consider price and interest rates, condos seem pretty attractive at this point for the end user. Looking forward, they are expecting maybe not another rate increase at the end of the year. But we should expect to see a bit of a jump when it comes to our overall sales numbers from here on in towards early 2024. Now, of course, this is all dependent on exactly how much and how high interest rates go over the next 6 months. So it's just a wait and see at this point. Anyway, thanks for watching. Till next time. Talk to you later. Bye.